Welcome to the 15th episode of Dividend Investing Insights, your one stop for all things dividend investing. Join us as we explore ways to maximize your dividend, share tips, share insight so that your wealth increases progressively over a period of time. In the episode today, we'll continue to look at the portfolio that we have been building over the past few weeks. Also, look at the performance as to how our portfolio is performed and look for new avenues to make investments. However, like always, let's have a look at the performance of the share markets in the last 1 week. In the last 1 week, S&P 500 lost 105 points to end at 5,728 points. NASDAQ 2 lost 400 points to end at 18,239 points. And here locally in Australia, ASX 2 lost 55 points to end at 8,166 points. But as I have said always, stock market will go up and down all the time. And you as an investor should look at stocks that have the ability to pay the dividend in the current year and increase its dividend in the years to come. Analyze stocks in a way for companies that are fundamentally strong, have a good dividend yield, have the ability to pay out the dividend now and the years to come. Anyway, let's do a quick recap of the investments that we have made until now. The first stock we had bought was KDP. We had bought 50 stocks at 37.46 for an investment of $1,873. Then we bought JP Morgan Chase. We bought 10 shares at $2,105. We bought AT&T 100 shares at 21.91 for a total investment of $2,191. And last we had bought 30 shares of CVS Health at 60.34. Just also a quick reminder that the ex-dividend date for CVS was 21st October and was paying out 66.5 cents on 1st of November. Now, let's look at, we still have $2,000 left in our kitty. So let's look at as to what could be the opportunity to invest further. And again, like always, we look at the dividend calendar, see if there is any company that is fundamentally strong, has a good dividend yield, and which could result in an investment from us. So as part of the review of the dividend calendar, I come across Unilever PLC. Unilever PLC is a global brand operating in 190 countries, making fast-moving consumer products, soaps, powders, even ice creams, and a number of big level of a high diversified group of products that are quite successful in the market. All viewers would be aware of Dove, Lux, and a number of Sunsilk and a number of other brands, Magnum ice cream that are created by Unilever. So Unilever, as of this recording, has a market price of $61.32, has an ex-dividend date of 8th November, and is paying out 47.7555 cents on 6th of December 2024. Let's look at whether this meets our investment criteria. So again, like always, we will look at the dividend investing checklist, and we'll ask ourselves if we understand the company's business, what is the dividend yield for the current year, what is the average dividend for the past 5 years, payout ratio, price to earning ratio, price to book ratio, revenue growth, profit growth, and cash flow. So let's put in the numbers and analyze them one at a time. Do you understand company's business? Yes, operates in 190 countries. Unilever operates in 190 countries, has a number of industry-leading products that are bought by consumers the world over. What is the dividend yield and the dividend for the current year in 2024? This is paying out $1.866 per share for a dividend yield of 3.04%, which is quite good, much better than bank interest that is being paid across the world. So, quite a good dividend yield. Average dividend for the past 5 years, 1.87. This is interesting. So what this indicates is that the dividend has been more or less stable in the past 5 years. What is the payout ratio? Payout ratio is a quite healthy 64.17%, which is where we want to be. P ratio slightly higher at 21.44. Price to book ratio higher at 6.89. Year-on-year revenue growth, yes, and I could clearly see a revenue growth for the past 4 quarters. In fact, a number of things are going well for Unilever PLC. So a very good consecutive quarter growth, revenue growth, uh, profit growth. Profit growth, I could see a consistent 10 to 11% net margin. 10 to 11% net margin means a much more higher gross margin and profit margin. So 10 to 11% net margin is quite good. And does it have a positive cash flow? Yes, it does. So looking at all of this and analyzing this together, there are two things that stand out, which is where we need to take a call. Now, the average dividend for the past 5 years is 1.87, and the dividend for the current year is 1.86. Is it an indication of a dividend trap? Does this mean that the dividend will continue to flow further down? A closer inspection indicates that, while it was paying high dividend, post COVID, the dividend fell and has started to rise again. So it's like it went down and is going up again. So it's on the right trajectory, and something that can be not ignored, however, monitored for some time. So we look at the next dividend that comes out, see whether it is moving in the right direction. But what I could see is at least the last six dividend payout, which is the last 6 quarters, there is increase. So it is moving north, which is good. So we will let this go. And while it is a cause of concern, but not a deal breaker, we'll still consider it. P ratio of 21.44. Again, higher than 20, but if I look at across the industry of similar FMCG products, it is lower than some of the other FMCG companies. Price to book ratio of 6.89, again higher than what it should be. In fact, much higher. A recommended PB ratio is between 1 to 3. This is much higher, but we will still take a call on Unilever, and we will buy this. And what we'll buy is we'll buy 33 Unilever shares at 61.32 for a total investment of 2023.56. Now, until the last episode, we had started out with an amount of $10,000, and until now, we had made investments of 7,900 something. This would be our last purchase where we cap it, and then if any adjustments are needed, we will adjust within this portfolio. But this is, we'll go ahead with this purchase. Now let's look at our portfolio, how our portfolio stands. So the first stock that we had bought was KDP at uh, 37.46. As of this recording, with all the downturns that the market is seeing, the share prices fell to 32.82 for investment of 1641. JP Morgan Chase, since our purchase has gone up from 210 to 222. AT&T has gone up from 21.91 to 22.22, and CVS Health fell from 60 to 55. And today we are buying Unilever PLC at 61.32, 33 shares, which makes a total investment of $10,002.76. This is the amount we had, and this is what has been invested. Pardon me, there's a bird singing in the background. Um, um, Against this, the portfolio right now stands at 9,780.26. Well, that's not all. We also had past dividends of $11.5, which we had got from KDP. And looking at the dividend dates, we had dividends of JP Morgan that came in at 12.5. We had AT&T dividends that came in at $27.75, and CVS dividend, which also came out last week at 19.95. So collectively, while the portfolio stands at 9780, if I put the dividends in as well, it comes to 985, 9,851.96. That's the total portfolio value, and this is how dividends help. So while the portfolio itself has gone down, you can see that we have a much more cash amount that is sitting with us, which can be reinvested. So that's the power of dividends. Well, anyway, so that's where we are. We are tracking a little bit lower, more an indication of the stock market where the prices have been going down. But let's continue to pursue it. Let's look at, as we move forward, we'll start to look at what announcements the company are making. Is it worthwhile to stay in this? And then we will regulate our investment to see which way we go. But that's all for the episode for today. And before we conclude, we look at what dividends are coming our way in the coming weeks. And the dividend that's coming our way in the in the coming week is Unilever PLC, which will be paying out on 6th of December, 0.4755, 47.55 cents per share, which we will also consume. But in the short term, we'll start to look at as to how our portfolio is performing. So before we conclude, putting the checklist again, use this to make your investments, invest in the market. Stock market is probably one of the most profitable and the most transparent investment vehicle. Property may have deviation. Somebody buys it higher, somebody buys it lower. Stock market is the only market where everybody operates on an even field. So use it to make your investments. And until the next episode, thanks for watching and talk to you soon.